Welcome to Real Estate Investing for Women. On this show, you will learn how to create wealth through real estate the blissful way. That means with very little stress and very little time. We talk about strategies, mindset, heart set, money smarts, resources, and so much more to ensure you're able to create the success you most deeply desire. Now, here's your host, Moneeka Sawyer.
Welcome to the Syndication series, where you're going to learn all about what syndication is and how you can utilize it to build cash flow and grow your wealth. It's a really exciting strategy, and I'm looking forward to sharing all of our guests with you. So now let's get to the show. Today, I am so excited to welcome to the show Liz Faircloth. Liz Faircloth co-founded the DeRosa Group in 2005 with her husband, Matt. The DeRosa Group, based in Trenton, New Jersey, is an owner of commercial and residential property with a mission to transform lives through real estate. Yay! DeRosa has vast experience in bringing properties to their highest and best value, which includes repositioning single-family homes, multifamily apartment buildings, mixed-use retail, and office space. The company controls close to 1,000 units of residential and commercial assets throughout the East Coast. Liz is the co-founder of the Real Estate InvestHER community, a platform to empower women to live a financially free and balanced life through over 25 meetups across the US and Canada, and an online community and membership that offers accountability and mentorship for women to take their businesses to the next level. She is the co-host of the Real Estate InvestHER show, which I will be on too. And we've actually done each other's shows before, so I'm sure you've heard us both on each other's shows. And recently published their first book, The Only Woman in the Room, Knowledge and Inspiration from 20 Successful Real Estate Women Investors. Liz has been interviewed for many articles and top-rated podcasts, including mine, including being a two-time guest on the top-rated Bigger Pockets podcast and the Best Ever show. On the personal side, Liz is an avid runner, has completed several triathlons and marathons, has 2 adorable children, and is a New York Mets fan. Hello there, Liz.
Hello there.
Welcome to your show. We're a little late in the day, so I stumbled a little bit. Sorry about that.
Thank you so much for having me.
Yeah, it's so nice to see you again. Thank you for coming
so nice
to the
see
show.
you too.
Yeah. So you guys, you and Andressa do so much cool stuff with the InvestHER community. And I just love what you're doing together, but I haven't really gotten to chat with you about what you're doing. So Liz, why don't you give us kind of a high level version of your story of kind of how you got interested in real estate and what your path has been?
Sure. So, it wasn't a linear path as
it never is.
There never is, right? We want it to be, but it just never is. But yeah, my husband now at the time, him and I had started dating. Even before we started dating, I was in graduate school for social work. Actually wanted to get I got my master's in social work, wanted to open my own practice and just help people. That's been always my passion. And during that time, my brother-in-law, who was the only entrepreneur I ever met, grew up in a great family, but middle-class family. My dad was a school teacher. I was never introduced to entrepreneurs or investors. So that just wasn't in my sphere of any sort of context growing up. Hard work ethic was there, but certainly the business piece of it, I was not familiar with or just didn't have a lot of exposure to until I met my brother-in-law, who was an entrepreneur, started a business and handed me Rich Dad Poor Dad. And I'm like 23 at the time. And he's like, you got to read this. And I'm like, all right. And I liked personal growth books. I really did. I started in college just reading different books. I always enjoyed them. I liked learning and growing. It's like a dork in college, right? You're reading like Awaken the Giant Within, and everyone's like, what are you reading? I'm like, no, I don't like fiction. I still don't like fiction. Yeah. And I have to learn something from it like a wackadoo. But anyway, long story short, I read that and my eyes were just like open to just this idea of passive income. And I just honestly never heard of that before. Like, wow, I can have money working for me, not me working for money. So it was a whole new, like, open my eye concept, which I know a lot of people have said, but really what kind of like got us involved. I then started dating my now husband, and every weekend we lived about 2 hours from each other. Every weekend we go to like all the RIA meetings. and just start learning. We were in our 20s, didn't know anything. We didn't really have any money to invest, but we said, let's just give this a go. And so we started taking courses, and they told you to, like, door knock. This is before Facebook Marketplace. This was like literally open the newspaper, go to for rent ads, and call tired landlords. That was the $1 million tip we got at one of the events. So that's what we did every weekend. Literally just went door to door, knocking on doors right outside of Philadelphia where my husband lived. And I visited him. And one day we got someone to say, yeah, that's interesting. Let me think about that. And then we called them back and struck up a deal. And a year into us just literally taking courses and door knocking and cold calling and just bootstrap whatever we could do, really, we struck up a deal and bought our first property, which is a duplex, about like $150,000. We learned everything on that property, right? We dealt with people, when you buy a property, the tenants that are there may not be your tenants ongoing because they don't, it's like a new sheriff's in town. And we just learned the whole multifamily kind of, it opened our eyes. We're like, wow, and there's only multis in this neighborhood. So it wasn't like we chose a duplex. It just so happened because it was like older homes right outside of Philadelphia. So there was only duplexes and small multis. Long story short, we got our start there, and then we moved to New Jersey and then started our business focused on really, New Jersey and buying properties there. We sold that property and did 1031 into like a 4-unit. And then that kind of started our trajectory in New Jersey. And then over the 15 years I've been doing this, we had lots of twists and turns. I wish we just focused on multi, but we didn't. We got involved in a lot of different things early on, people who get distracted easily do, and people that are probably a little naive, a little young as well can do. We flipped houses, we got into tax liens, we bought a commercial building, we bought raw land. I mean, every random thing you could possibly think of, we probably have done it. Until we doubled down on multifamily. So our business today is really focused on multifamily. We literally went from like a 2 duplex to a 10-unit to we grew very steadily. We didn't go from a 2 to a 200 unit, if you will. We did, but over time. And now we focus on larger multis, and we're starting a fund where we're actually investing with other operators and things of that sort. So we're kind of diversifying a little bit outside of multi, but more like from a fund perspective. So I'm involved in that, not day to day, but more from like a strategic level and helping build our team out, and really kind of exciting to be able to invest in kind of different sectors of real estate, not just multifamily. But we do love multifamily. We have a letter of intent on a property in the Southeast, which is where we focus on now.
Nice. So tell me a little bit more about this fund. Let's dive a little deeper in that.
Yeah. So the fund is going to be, it's interesting. It's something that we've talked about over the years, and then COVID obviously happened, right? And COVID happened, the pandemic and everything that, I'm like, COVID happened. I'm so over years ago, but still, I know that thing that people wear masks, and I know you're in California, I'm in Pennsylvania. So we're in the thick of literally shutdowns, right?
Yeah. Absolutely.
But, and I know things are opening up, which is wonderful, and people are getting out. But, so, all the conversations we had were like, how's this going to affect our buildings? I have to say, our multifamily, we were like, any loan that came out, we took advantage of. We didn't know how it was going to affect. We didn't know who was going to be able to pay. We didn't know what was going to happen with tenants and everything like that. So our buildings, knock on wood, the ones that were doing well or stable, thrived during COVID, really. We had a building in North Carolina that was 40% occupied. It was literally a turnaround building. It was 200 units. And we got it up to 90% during COVID.
Wow.
Because of the turnaround, and we were just doing some of these buildings thrived. Other buildings that were kind of having some issues prior to COVID continue to have some issues. So while that was a stable sector for us, we're kind of all in on that sector. And my husband and I talked a lot about, okay, as we grow our businesses, what do we want to do? And we want to diversify, and the importance of that. And what does that look like? So the fund is an opportunity. So we've always focused on raising money and then putting it into specifically into a building, into a project. And so with regards to the fund, we said, okay, and we talk to people all the time, right? People are like, I want to, this sounds like a great opportunity, a passive investor. And then you're like, I don't have a building. I don't have anything under contract right now. So there's nothing that you can, and then we refer them. We know a lot of really, people we like and respect in the business. We have no problem with that. There's a lot of good syndicators out there. we wanted to have another kind of flavor of ice cream, if you will. And so the fund will obviously be an ongoing kind of rolling fund, and it will give investors what we're going to actually invest in are all things that we know and that we vetted. So we're not going to start investing in a business that we have no idea, because that's a whole other level, right? Because it's like mitigating risk. You just want to mitigate your risk. You want to make sure you're mitigating risk for yourselves, but most importantly, your investors. So hard money loans, that will be one. So we're going to start to work with maybe like we're vetting, hard money operators that we like and respect, that we know do good business, but we're not the hard money lenders. They are, and we're going to do that. Multifamily will be a piece of it. So as we have a project that comes up, we're going to almost like invest in our own projects, if you will. And that'll be a piece of it. Those are the two main pieces. And I want to say even like self-storage. And there's been operators that that might be another sector. So be all related to investing in real estate on some level, but it will be in a way that we're not the sole operators of everything. So that's kind of where, as we evolve, right? It's like, you don't want to do everything yourself. You just want to be able to, and what do you do well, right? And you and I know, it's like, once you figure that out, you got to focus on that. And, so that's kind of what that looks like. And we have building out a team, and that's been in the making for some time, but that's the goal.
Interesting. Oh my gosh, Liz, I'd love to talk to you offline on all the nitty gritty about that. Anybody listening to me right now, that if we went through it now, their eyes would glass over. But wow, I'm so fascinated by that idea, because I feel like for me too, I have been, there's something that I do really, really well. I do executive homes in the Silicon Valley. I've got my entire systems. It's all built out. It runs itself. I don't worry too much about it. I was telling you before that I'm taking all of May off for my birth month, because that's when my birthday is, and we're traveling to Hawaii, and I'm going to a spa in Palm Springs with my sister, and we're kind of, we have our vaccinations, we're all taken care of, we're doing our tests, everything's good, but we've decided that it's time to celebrate, right? And so I get to have that lifestyle. Is fantastic. I'm not particularly interested in working significantly more. I mean, I do get boards. We have construction projects. We have some other stuff going on, so that my entrepreneurial mind doesn't slow down or get bored. But what is happening is I've found several different syndicators doing different things. So I've invested in storage. I've invested in a multifamily. I've invested in a variety of different things, kind of like what you were talking about.
Yeah.
And often wondered, because each time that I invest, and I don't know how this is going to work for you guys, but every single time I invest, it's a minimum of $100,000, right? And that's great for us because we have that money. We're looking to retire. We're moving that way. But not everybody who's listening to the show has access to 100,000 for this and 100,000 for that and 100, you know what I mean? So they want to be able to diversify without spending that much money. And so what does that fund look like for you? Like, is there going to be a minimum investment? Have you worked that out? That sort of thing. Like, what does that look like?
No, that's a great question. I think we're still working that out. One of the key team members that we really knew that we needed, because that's, it's like, it's not how, but who, and if you start to build out different businesses, you can't know everything. And I don't even want to know everything. Quite honestly, that just hurts my brain a little bit to know everything, because as women, right, we want to know everything.
Yes.
But anyway, one of the people that is a key kind of principle in this endeavor is a fund manager, literally for Wall Street, has run funds. And, as we've talked to him, I think the minimums are going to, I'm not sure exactly. And that's a very good point. I will say though, one of the things that one organization we've started working with is called Republic. And basically what they do is they, in essence, have a similar type of approach in that people can invest 5,000, 10,000. I think even down to 1,000. Don't quote me on that, but I'm not familiar. What's fascinating though is for our last syndication was a 336 unit apartment building. And, to your point, our minimum was 50,000 on that project. Not everyone has that, but they want to invest in real estate. So we found this company, and what basically they're doing is they're the investor in that project, but they're the ones going out to the accredited investors, because it is really accredited investors, to then say, okay, all pooling all this money together, and then they are the investor in that project with us. So Jane Doe, who's got 1,000, Mary has another, they're all kind of pooled in this, like together with, in this company called Republic. And then Republic is and ultimately the investor, if that makes sense. And it was really cool because that was the first time we'd ever done that. Because, you think about it, we have a 336 unit apartment complex. We had close to 80 investors.
It's a lot to handle.
It's a lot of people, and that's even at the minimum of 50,000, right? You get some people who maybe put $500,000 in. You have some people put 100,000. Any amount. That's a lot of money. Listen, I'm like literally the cheapest person. Me putting $1,000 in anything, I'm like, that's me. Let alone that kind of money.
Yeah.
I know, I get it. So that was really interesting, and we were really pleased to see that. And it's a neat approach, and I think that's the future, to be honest, because I love that concept, and I was really intrigued by it. So as we do other deals, we're going to be working with them. I'm not sure the relationship exactly how that's going to play out in the fund, but that was just a neat example for our last syndication that gave everyone the opportunity, and that's really cool.
So are they more of crowdfunders, or are they syndicators, or do you have any idea on their structure? I'm just interested. I've never heard.
Yeah, it's a good question. I'm not too sure which level they are. I just kind of heard about it conceptually and was really intrigued, but I know they do. I know that they've been around, and they're not just, I know they just didn't start their company, but yeah, there's a lot of different pieces around it to ensure how you do it. And obviously, because some funds are accredited, not accredited, and all that plays into it.
There's a lot of legal stuff around.
Yeah, a lot of legal stuff. We
Yeah.
pay a lot of money to SEC attorneys and all that kind of stuff. Because I know this last project was we could, because there's projects you can't solicit, right? It's illegal to do that. There's other projects, friends and family. But I know with this particular project, we advertised because we only accepted accredited.
Interesting.
So but it's kind of a neat approach, but I'm happy to get more info and
let's you and I put our heads together. I'd love to hear a little bit more about that. Because I'm always looking for ways when I get phone calls from my ladies, when they say, well, I've only got this much, what can we do with that to benefit them in the biggest way. Right. So
yeah, absolutely.
That would be amazing. So another topic that I'm getting a lot from my ladies is this sort of idea of out-of-state investing, especially here in California. And there's a lot of markets, not just here, but there are a lot of markets where people feel like I can't really invest in my backyard, and they're really scared to go out of state. So, and I know that you do a lot of multifamily out of state and that sort of thing. So let's talk a little bit about that and sort of your perspective and how to kind of look for projects and stuff like that.
Yeah, sure. So for our first, I'd say about first 7 years, we invested locally. We had a rule. We don't invest more than 30 minutes away. So we had a team, we had a leasing agent. We had our bookkeeper who did all the accounting. We had like a tenant relations person. We had a maintenance person. So we had literally 4 people on our staff besides me and my husband helping us manage our local properties. We bought a property in Philadelphia, which was an 18 unit. And that was 35 minutes. So it's kind of all right, we could still do it,
Mm-hmm.
And then, the market kind of shifted, right? I mean, I'm in the Northeast, and New Jersey, I don't have to tell you, New Jersey is not the most favorable state on taxes in this country. And then even in Philadelphia, the projects that we were looking at were getting outbid. It was getting more expensive. And we raise money, right? We work with investors. So the returns are really important to ensure that we're going to get into the projects. We're not just parking millions of dollars from a relative. We're constantly looking at, okay, how are we going to, really get into the right area for our investing goals and our investors. So a broker had brought the same broker, and that's the first thing I'd say as a good tip is start building relationships with commercial brokers. And sometimes it's tough, right? Especially now, right? You think about a hot market, everyone's calling commercial brokers saying, hey, I invest in multifamily. Do you have anything for me? Yeah, you and 90 million other people. So you got, come on, let's we got to differentiate. So just keep that in mind too. But we had closed that 18 unit with the same broker who called us about a property in Lancaster, Pennsylvania, which is about an hour and a half from our where we were living at the time. And he said, are you interested? And we're like, oh, that's an hour and a half. We're not going to send our leasing agent there. We're not sending our maintenance person there. We need to look into property management companies. So after vetting the deal, and that's a great story in and of itself, but with the first domino always is, I think, a good property management company.
Mm-hmm.
You're going to need that. Now, some people successfully invest in properties and they self-manage the properties. I've heard of it. I've had, we probably know a lot of women who do it successfully. We knew with a 49 unit, that wasn't going to be our best strategy. So we knew it was going to be important to have, really a local property management company. Why I say that's a great person to have on your team. So say if you're sourcing an area in Alabama or wherever you're sourcing deals, start getting to know, before even looking for property, start getting to know the property management companies there, because that's going to follow, right? So if there's literally if you cannot find a property management company in a geographical area, that might be a sign, right? For a lot of reasons that something is off. I mean, even with Airbnb, I know that's very hot. Vacation rentals and luxury vacation rentals, whatever the interest of people, whatever people are interested in. If it's a hot area, there's people managing in that hot area, and that's a great source and a great team member to start to talk to. Number one, they know the area. So what streets are good, what streets aren't good, what areas are up and coming, what areas are just too hot and too expensive, because we know that that's the case too, in an exuberant way now, right? Everywhere is like, hold on. What do you want? I mean, I called on my way to Target the other day, because, you're a real estate investor. You just never turn it off. I saw a lot for sale, but I'm totally tangent, but I saw a sign. It said for sale and had a handwritten phone number. I'm like, oh, that's a good sign. Great area, Bucks County, where I live. And I'm like, oh, that's an interesting area. I texted the person, gal, I don't know who it is. I said, hey, how much, is the lot, and what's the size, and is it, sewer, all the things you ask. We've done a bit of new construction, not a ton, but we could probably pull it off. So we got 250,000. I'm like, 250,000. Like, I don't even know if you'd get $500,000 for the property, let alone that's just for the lot, right? So like, people are just nutty with their prices right now. But anyway, total tangent. But going back to out of state, I think property management companies are so helpful to have on your team as an initial team member. Commercial brokers, what commercial brokers care about is if you've closed deals. They do not want to work with people who are going to get to the finish line and not be able to pull the money together, and because they want their commission. So that's what they care about. Beyond everything else you want to talk about with them, they care about if you've closed with them or with anyone else. Like if you or someone on your team, your core team has closed deals that you're looking for. So if you're looking at a 100 unit, you better have someone that you're bringing to the table that, yep, this is the kind of team we have and the kind of team we've done, and this is what we've closed. That is what they're thinking right now when you call them. So this broker brought us this project, and we started to talk to property management companies in the area and vet the area. What really helped, and I'd always say this, if you have somebody in your family or in your network who lives in the area, is really helpful. They don't need to have a degree in real estate. They don't have to have like 10 years in investing. But if you have some boots on the ground and feet on the street, people that aren't just property management, because you gotta remember, property management company is a vendor, right?
Mm-hmm.
And we always like to offer our property management companies potential ownership in the building. Mm-hmm. And so every time we buy a building, we say, we're syndicating this. Would you like to own part of it as well? So it's not the best sign if they're like, no. Even if they put 25 grand in, maybe they think that's like chump change. But to me, I'm like, But most of all the property management companies we work with have invested in our deals. And that's a good sign.
Yeah.
As a, skin in the game, so to speak. But I would say the second, start to look at, is this an up and coming area? And do I know anyone in my network that can help me? Is there a reason to go there? Do I want to go there? Mm-hmm. If you're going to invest in an area, those are questions to ask. And if I have to now get on a plane, is that on the way to my aunt or my parents? Or is this an area that my kid's going to college for the next 4 years? I don't know, but make it kind of like make sense versus an area that literally you know no one. That can work, but I would say if you can blend a few things in there, and it is an up and coming area, you're going to want somebody that's 10, 15 minutes from the property, whether it's a realtor, whether you got to pay them hourly. If you can't get there, someone needs to get there because fires happen, things happen. And we have a cousin in this area, Lancaster. And so when we were looking at it, we're like, what do you think? And he's an investor, which was even awesome. It was even better. But, he was able to be our boots on the ground. So he's part of our kind of like general partnership team. And that's been huge. We had a fire there 2 years ago. Of course, we want to be there to make sure everyone's okay. We also want to see what's going, we couldn't be an hour and a half. The fire is probably going to do a lot more damage than 10 minutes. Right. So,
right.
I don't know if that gives some context, but,
well, it's interesting. So you said so much there, but a couple of things that I really want to highlight is I think that people think that you hear about an amazing market and you should just go invest in there, right? Like I remember just before 2008, right? Like in the mid 2000s, everybody was in Henderson, Nevada, right outside Las Vegas. Do you remember this? And like
no.
everybody was over there. I actually have close friends who were all, they'd all invested, and there was also Florida, there was also Chicago. Those were some big hubs where they were really, really marketing to investors from out of state, especially California, because Californians had a bunch of equity and it wasn't working for us. So, everybody could get loans like by just stating things, right? So there were these pockets that were trending. People were making money, money hand over fist, whatever. And for me, I just thought, you know what? I always play the longer trend. I don't play these short-term trends. And I will admit, I would probably be a lot richer if I got that right more often. But there's so many people that get that wrong. And part of it is just that they didn't do some of the things that you talk about. Like, it wasn't a place that I would ever want to visit. It wasn't a place on the way to anything. Las Vegas it is, Chicago it is, in Florida it is. But a lot of people didn't have that mentality of, would I want to go there? Would I vacation there? Would I want to live there? Would I want my kids to go to college there? Like, is there any reason for me to go there? Even in Henderson, it's not like people were like, oh yeah, I'd like to have something in Henderson because I like to go to Las Vegas. No, it was, I'm investing in Henderson because everybody else is investing in Henderson, right? So I love how you talk about this sort of like, especially in your first few deals, I think this is hugely important, is as you're getting to know what this is like, the very first time, you step out of state, you don't want it to be in a market that you completely don't understand, that you just get a bunch of numbers from someone like you say that's a vendor. They're interested in selling these properties. Now, they're not going to lie to you, but they're definitely going to paint a very, very pretty picture, right? Mm-hmm. So, and if you don't know the market and you don't know anybody who's there who kind of that like, like we have a friend, we had a friend that moved to Henderson, and we went to visit them one time when we went on a trip to Las Vegas. And he was like, yeah, there's all these crazy investors coming in here. And all around town, people are like, oh my God, this bubble is going to blow, because there weren't as many people in the restaurants anymore. And there were things that were closing down. And we're like, how is it possible that all this expansion is happening, but the actual economy is shrinking? Well, and there's no way to have known that if we hadn't had this conversation with our friends that had just moved there. Like there's all this hype about Henderson, but really like they just closed down the local, whatever it was, Whole Foods or whatever, market it was. So I love what you talk about is like, we don't have to have boots on the ground all the time, every time. Eventually you do develop a skill in kind of getting to know markets, or you focus in certain markets, right? But especially in those first few deals that you're going out, that is all such good advice, Liz, is just to, make sure that it's someplace you would want to go. I mean, it's like basic, intuitive, common sense stuff that we don't think about, right? Because we get whisked away in the excitement of what's possible, right? Absolutely. But just that basic common sense stuff, would I like to go there? Is there anything there that I appreciate? Do I have someone that's relatively close by, maybe within a half hour, that I could just, even if they're not going to be boots on the ground, like just have a conversation once in a while, see how things are going, in that market or whatever. So Thank you so much for that, because normally people are like, you need to look at the colleges, or you need to look at the employers, or you need to look at the average income, and yes, you do need to do all those things, but it's not the end of the story. And especially when you're starting, it's not necessarily going to give you the comfort that you need to actually get out there and do it. Because here's the thing is nothing happens for you until you take action. And if it's just the numbers and that's not inspiring you to take action, then nothing is happening for you. Right?
Absolutely. Absolutely. Yeah. And so many people do get kind of caught up, and there's so many important numbers, right? As you're analyzing markets and analyzing deals, but even just the idea of what like COVID taught is the importance of diversity of jobs. Are there different jobs that people can actually be employed by? So if they're literally all in on the tech or all in on the government or all in whatever industry, just the idea of diversity of jobs is to me even more important than job growth. They're both important, but just to know that people can get different jobs. There are jobs. These are really positive things, right? There's so many markets that don't have that. They're just even high, high priced areas don't have that. So we probably invest more in the workforce housing, more up and coming areas, not areas that are on any sort of hot market list. And those are too expensive areas. We're like, no, we don't want to invest in an area that's on any list.
That's right. I love that. Thank you so much for that. It was, I think it's much more practical advice. My ladies hear a lot of really, really good advice here from very smart people, but sometimes we just got to ground it. This is how you make yourself comfortable with that. Ask yourself some real common sense questions, right? Because so much of building a real estate business is just common sense. And there's a lot of fancy languaging. There's a lot of people that say things that sound really smart, but in the end, it's a common sense business, right?
Yeah.
So thank you so much for grounding that for us. It was really helpful. Yay. Okay. I can't believe Liz, we're already a half hour in. We just keep talking, you and I.
Keep going.
So, but I wanted to tell you ladies, we are going to do extras. So Liz and I will keep talking. We're going to be talking more about sort of building your team. So finding partners, building teams when you're in state or out of state. She likes to say who's on the bus, right? And then team building with all those people that are on the bus. And I really love that picture because, you're all going out on a field trip and you're all on this bus. Where are you going to go? How are you going to get there? Is it going to be fun? Is it going to be profitable? So we're going to be talking a lot about that with Liz in extras. So that we have that to look forward to. Before we move to our 3 rapid fire questions, Liz, could you tell everybody how they can get in touch with you?
Sure. So just in terms of like some of the active kind of multifamily projects are fun to just learn a little more about some of the day-to-day kind of real estate projects, you can go over to my husband and I's business called DeRosa Group, DeRosa Group.com. My husband does a lot of teaching as well. We both love teaching and helping. So you'll see a lot of YouTube content and things of that sort from him. And then, in terms of women who are interested in, getting more support from women and getting connected, check us out, the Real Estate InvestHER, HER.com. And from there, you can learn all about our meetups that are across the country and our Facebook community and membership and things we got going on with helping women. So you can check us out there.
Yay. Thank you for that. Awesome. Okay. Are you ready for our 3 rapid fire questions?
Yes, definitely.
Perfect. So Liz, tell us what one super tip on getting started investing in real estate.
Focus on a niche. Don't get distracted. Focus on a niche and, go all in on one thing.
Love that. And then what's one strategy to be successful as a real estate investor?
Don't give up. Don't give up. Things are not, you're going to lose money. Well, I hope you don't lose money, but you may lose money like many of us. You're going to get sued potentially. Yeah. I mean, 15 years, I can tell you a lot of interesting stories. We've had money like mini Bernie Madoff situation where literally hundreds of thousands of dollars was stolen from us. We don't give up. I mean, and I think that makes anyone that's successful in any line of business or anything in life, right? But just don't give up. Know that your mistakes are going to just make you propel you forward and you're going to learn from it and you're going to grow from it. If you don't have that attitude, then everyone gets stopped after they lose money and something bad happens, but don't give up. That's the key.
I love that. And what would you say is one daily practice that you do, Liz, that contributes to your personal success?
Yeah, it's something I've always done and then go back and forth and don't really do it consistently, but I've been doing this year consistently, I should say, pat on my back, at least for the first number of months. is I do a daily prayer. I read a little spiritual prayer, think about it. And then I've been doing like 10-minute meditations. I'd like to increase that, eventually, but for me, it's been really super helpful. And I just focus on whatever I learned in that prayer, and I focus on that in my meditation. And I do not, if I miss a day, it's rare, but I have maybe missed 1 or 2 days for 4 months. So, but every day I usually get that in.
Nice. It's so interesting because my meditation practice has sort of gently worked its way into my life to where I don't even think about it. It just kind of started to just happen. And then the last week I missed 3 days, and I was like, my husband and I were on edge, and I lost my temper at a restaurant. Not like I didn't yell at anybody, but I like didn't have the patience to wait, so nobody saw it, but I felt it. I'm like, what is going on with me? Who is this person? And I realized, oh my gosh, my husband was like, are you really stressed out? And I was like, I haven't been meditating. Like I just haven't been taking Moneeka time. So it's really amazing how, I have been taking Moneeka time. I'm still getting, I got a pedicure. I still do, but like that peace that starts my day, it's been so important. So I'm glad you mentioned that.
It's constant, right? It's like going to the gym. You can't do it once and you're good, right?
That's every right. Day. Yeah. I always say about bliss, like all of our bliss practices, you can't just brush your teeth once in your lifetime and hope your teeth are going to be good. You got to brush it every day. Right?
That'd be great if that was the case.
I know, right? That's right. But you got to just keep doing those little things. Right.
Yeah.
So, well, Liz, as always, I've loved our conversation. Thank you for everything you've shared in the show.
Thank you so much for having me. This is amazing. And I hope I was helpful and, gave some content that your audience will help them.
Yeah, absolutely. And ladies, Liz and I have more to talk about. We're going to be talking about building teams and who's on the bus and all of that really good stuff. So stay tuned for extra. If you're not subscribed, just go to realestatinvestingforwomenextra.com. You get the first 7 days for free. You ladies know this. Check it out. See if you love it. And if you don't, that's totally fine. But do check it out at realestatinvestingforwomenextra.com. For those of you that are leaving Liz and I now, thank you so much for joining us for this portion of the show. I look forward to seeing you next time. And until then, remember, goals without action are just dreams. So get out there, take action, and create the life your heart deeply desires. I'll see you soon. Bye.
I hope you enjoyed today's show. If you'd like to find out more about how to become a blissful millionaire, go to blissfulinvestor.com. See you next time.